Okay, hey guys, so I am on the IRS.gov website, and this is the retirement plans. Now, a lot of people have been taking out money from their 401ks, okay? If you have a 401k, now I'm not a financial advisor, I am a tax preparer. I prepare people's taxes, okay? Every year, I prepare people's taxes, and every year people take out distributions, and they're not 59 and a half yet, and they end up having to pay the 10% penalty depending on how much they took out. So if you took out 5,000, depending on how much you have in there, if you took out 5,000, then you got to pay the penalty of the 10% on that. But let me go through the IRS website. Okay, this is literally the IRS website. Okay, and let's go through it. Okay, this is the retirement topics, exceptions to tax on early distribution. So basically, if you take out money earlier than 59 and a half. Okay, so it says most retirement plan distributions are subject to tax and may be subject to additional 10% tax. Generally, the amount an individual will withdraw from an IRA or retirement plan before reaching 59 and a half is called early or premature distributions. Individuals must pay an additional 10% early withdrawal tax unless exceptions apply, okay? So here is some exceptions where you don't have to pay the 10% if you take some distributions from your 401k, okay? It is your employer's plan for you at retirement. So it doesn't matter if you're 18, it doesn't matter if you're 25, it doesn't matter if you're 45. If you have a job and you're participating in your job's retirement plan, most likely it's a 401k, or like the teachers, they have like the 403b, things of that nature, okay? So the distributions will not be subject to 10% additional early distribution tax in the following circumstances. Age, okay? If you reach 59 and a half, okay? Automatic enrollment, okay? It says permissive withdrawals from a plan with auto enrollment features, right? So that means you literally are auto paying, all right? Birth or adoption, distributions up to 5,000 per qualified child, per qualified birth or adoption expenses. Okay, self-explanatory. Corrective distributions and associated earnings of excessive contribution, excessive aggregated contribution, or excessive deferrals made timely. So if you overfunded it. Death is after death of the participant, right? Which is the owner, which would be you, right? So you'll be able to take the money out. Well, you won't be able to take anything out. Your family will be able to take it out. If you're disabled, totally disabled or permanently disabled, you'll be able to take out your 401k without any penalties. Disaster recovery distributions up to $22,000 to qualified individual who sustain an economic loss by reason of federally declared disaster. Okay, by a federally declared disaster. Okay, so like Sandy and Katrina, stuff like that, right? Now, this is a great one. If you was a victim of domestic violence abuse by a spouse or domestic partner, up to $10,000 or 50% of the account. Distributions made after 2023. Okay, so if you are in domestic violence and you're trying to get out, or you're having like a hardship. Now, the thing about all of these, you have to prove it. Because once you take out distributions, right, and once you take out distributions, okay, you have to have one of these reasons so that you won't be taxed 10%. If you don't, you're going to be taxed 10%. So when you file your taxes in the following year, your company or the brokerage account is going to send you a 1099-R. Okay, I learned that. The 1099-R, they're going to send you. Okay, and you must file it. Okay, domestic relations to an alternate payee under a qualified domestic relations order. Education, qualified higher education expenses, which is like college, right? Emergency personal expense, one distribution per calendar year for personal or emergency expense up to or lesser than $1,000 or vested account balance over $1,000, right? Made after 2023, okay? So these are like some of the new, right? These are some of the new because we just left 2023, right? So these are some of the new laws that changed around your 401k, which I think this is amazing because most people have this issue. Okay? Most people have this issue right here. They have emergencies, they got family, something happens in their family, they need some extra cash, somebody dies, they need to go see them and they could take the money out with no penalties, okay? Emergency savings, distributions from a pension linked to emergency savings account made after, see how they telling you made after 2023, okay? Equal payments, series of substantially equal payments, okay? ESOP, dividends passed through from an ESOP, and it gives you all of these revenue codes, and it tells you which retirement plan basically it is. Home buyers, now this been in effect, okay? Qualified first-time home buyers up to $10,000, okay? So you can buy you a home with your 401k and you could take out up to $10,000 and not be penalized, okay? IRS levy, right, of the plan because of an IRS levy of the plan, okay? If the IRS changed, right? IRS changed the laws, okay? Medical, amount of unreimbursed medical expenses, okay? Another medical health insurance premium paid while unemployed. Certain distributions to qualify military reservants called to active duty. Return IRA contributions, rollovers, separation from service. The employee separates from the service during or after the year the employee reaches 55 or 50 for public safety employees of a state or political subdivision of the state. Terminal illness, okay? If you have a terminal illness like cancer, right? So distributions made to a terminally ill employee. So you won't have to pay the 10%, right? On or after the day employee has been certified by a physician. So of course, your doctor has to say that you are terminally ill. Unemployed health insurance, distributions equal to the amount paid for family health insurance by the individual who was unemployed for 12 weeks and received unemployment compensation in the year of the distributions, okay? Retirement plans, the 10% additional tax generally applies to early distributions from qualified plans, full 3Bs, A's, annuity plans, and traditional IRAs, including IRAs that are connected to simple IRAs or SEPs. Now, this is for self-employed people. So this is just a resource, guys. This is just some resources. The simple IRA, qualified public employee. So this, and they have a whole list of it, okay? This is like a whole list of how you cannot pay, how you are exempt from the 10%. Anything else, okay, anything else, you have to pay the 10%. But I'm sure if you take out, your money, you can find, one of the reasons here on IRS website. So I'll put this link below so you guys can have a better idea. All right. If you guys need your taxes done, okay, you can email me at agiletaxservices@gmail.com.